Good morning, everyone. Today is Tuesday, November 30th. I'm Marv Eisen. You're looking at a 3-minute chart of the S&P Emini of yesterday, November 29th. Now, the market is considering the effects of the Omicron variant of the COVID pandemic. So, markets have been rattled for the past several days, as all of you traders know. But I want to point out several things about trading, and particularly trading with respect to Taylor's book method. Now, I calculate Taylor's book method each day and send the support and resistance numbers to my students. And yesterday, November 29th, support and resistance calculated out to 45.64 at support and 46.21 as resistance. Now, Taylor's book method is a calculated range of numbers that give us a support and resistance, together with the range, the probable range of trading between the two of them. And that's all well and good for a mechanical solution. Now, George Taylor developed his system 70 years ago, and it's as applicable today to the stock market as it was 70 years ago to the grain market when George Taylor developed it. And many times these numbers, these calculated numbers, don't exactly act like support and resistance, but they act with importance. They are important in terms of how the market sees them. Because as you can see, yesterday at about 10:30, prices came down. Prices started up here at around 46.48, but prices came down to 46.21, which was the top of Taylor, and then bounced up and traded higher and finished the day higher. Does that mean Taylor is irrelevant? Absolutely not, because we have to look at the market as the ultimate arbiter of price, right? And in using a mechanical solution like Taylor, we're looking for some kind of a starting place to know where prices are going to trade. Now, we can modify Taylor. We can use Taylor and modify it if we know some characteristics about the market. And I'll tell you one of them. Within the first hour of trading, the market has either seen its low or its high for the day. Okay, so we know two things. We know Taylor's book method calculated out to resistance at 45.65, support at 45.65, and resistance at 46.20. So 55-point range. But we also know, in looking at the market, that the market started up trading up here, way away from Taylor, and certainly away from the close of the previous day at 45.95. But these are all significant numbers. The 46.21 is significant on its own. Forgetting about it's a resistance number. The 45.65 is significant on its own. And we also know that the market usually puts in its high or its low of the day within the first hour. So here's what I do. First of all, I'm going to remove the wicks on this chart to make it a little easier to see. Okay, so again, this is a 3-minute chart of the Emini, yesterday, November 29th. The market started up here at 46.47, and at 10:40 rather, the market came down and prices touched the top of Taylor's range and then bounced off from them. So let's say we're trading, and it's yesterday, and we see that the market started up here, reached the high of Taylor's calculation, and then used that as support and bounced up from it. We also know that the market generally found its top or its bottom within the first hour of the day. So what I do is I take this Taylor range, and I'm going to copy it, and I'm going to paste it right up here and move it and align the bottom number, the support, down at the lowest point that the market reached. So now I have a real reference to Taylor as dictated by the market. And I can see that the market, if my assumptions are correct, the market has put in its bottom over here. And if the market is trading over here and coming back up, well, two things can happen. If the market truly saw its bottom here, well, it could come down here and find the bottom again. Or the market will continue up for the day, which is in fact what it did. But these are valid assumptions that we can trade on. So using the fact that the market finds its bottom or top in the first hour of the day, and using the Taylor range as a guide, a template actually, and moving Taylor up to accommodate the actual price, we can trade this with a little more degree of confidence than we would if we were just looking at a blank chart. So those are my tips for the day. By the way, I've calculated out and sent to my students today's Taylor range. And I'm not going to give you the numbers, but you probably just saw them. And the market is ripe for, looks like it's going to interact with the bottom here. And it might be a gap possibility, a gap trade today. But we'll see. It's about a little over an hour before the market opens. I'm going to end this video and post it. Hopefully you've gotten some insight as to Taylor and to my Emini trading course at timelessdollar.com. Start out with my free course. My free course talks about managing risk and mistakes to avoid. So start out with that. And my Emini trading course is going to be a tremendous help for you. And I send you the Taylor numbers each day when you enroll. So that's me, Marv Eisen from Timeless Dollar. Thanks for watching. Have a great day, trade safe, and I'll see you in my next video.